This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Cracks forming. The number of existing homes sold last month dropped unexpectedly, and there's an important reason why. Labor violations. A group of senators is taking the investigation into Wells Fargo one step further. Now they're asking the Labor Department to get involved. Hands-free. Tesla rolls out its new version of its AutoPilot. But just how much control should drivers hand over to computers? Those stories and more tonight on Nightly Business Report for Thursday, September 22nd. Good evening, everyone. I'm Sue Herrera. Tyler Matheson is on assignment tonight. We begin with the market, where investors were in a risk-taking mood. The Nasdaq closed at an all-time high after stocks around the world rallied following the Federal Reserve's decision yesterday to stand pat on interest rates. Gold and crude also rose. Bond yields fell, as did the dollar. Investors were also trying to make sense of the positive report on the labor market and also the disappointing housing numbers. So the Dow Jones Industrial Average gained 98 points to 18,392. The Nasdaq added 44 to an all-time high of 5,339, and the S&P 500 was up 14. More now on that report on housing, which may be showing some new signs of weakness. Sales of existing homes in August declined unexpectedly, down 0.9% to the lowest level since February. Realtors say there's a simple reason: there just aren't enough homes to buy. Diana Olick has our story.
Doug Sterling is house hunting in L.A.
I'm a glutton for punishment.
We have our gas fireplace.
But he has no illusions of an easy search.
It's fierce because inventory is low, and then you get up against more investors who have cash behind them as opposed to someone who's borrowing and doesn't have a stronger foothold in getting in the door.
There are actually 10% fewer homes for sale today nationally than there were a year ago, according to the realtors, and that, they claim, is why sales are dropping.
Perhaps the buyers are exhausted. They are not excited about the low inventory choices. And furthermore, home prices consistently rising above people's wages. People are getting just knocked out.
Home prices jumped over 5% annually in August, and that hit first-time buyers especially hard. Their share of sales fell compared to July and has been historically low throughout this recovery.
I do find them a little disappointed that the starting point is a little higher than they would like. It's currently at $789,000.
And buyers are getting more savvy.
There's a lot of overpriced things out there, and one thing I like to do is kind of judge like the neighborhood. Is it already kind of become too hip and popular versus what's kind of going to be a trending spot that might improve in cost?
With prices rising so strongly, near record low mortgage rates aren't helping as much as they normally would. The good news is interest rates are not expected to rise by very much anytime soon, as some had expected.
Here we have our master suite.
Sterling knows he has to compete, but he also recognizes there is a limit. For Nightly Business Report, I'm Diana Olick in Washington.
The home builder Lennar is buying luxury home builder WCI Communities. The price tag about $640 million. That deal combines two of the largest home builders in Florida. Lennar is the country's #2 home builder. WCI Communities builds luxury homes. Shares of WCI soared nearly 38%. Lennar was up slightly. The number of people filing for unemployment benefits fell to the lowest level since July. Initial jobless claims dropped by 8,000 to 252,000 last week. That level is just modestly above the four-decade low hit back in April. Wells Fargo's CEO John Stumpf late tonight stepped down from the Federal Reserve Advisory Council. Separately, several Democratic senators, including Elizabeth Warren, are asking the Labor Department to investigate the bank. In a letter addressed to Secretary Tom Perez, the senators want the agency to examine whether Wells Fargo violated labor laws. The letter cites threats of termination, harassment, and other forms of retaliation at the bank. It also said Wells Fargo failed to pay overtime to tellers and sales representatives who worked late to meet sales quotas. The letter suggests widespread exploitation of the Wells Fargo workforce, and it deepens the bank's fake account scandal. So what could a federal investigation into Wells Fargo's wage and labor practices mean for the troubled bank? Michael Deutsch is co-founder and partner at the New York law firm Singer Deutsch, and he joins us now to discuss. Welcome. It's nice to have you here, Michael.
Good to be back. Thanks for having me.
What are the implications to Wells Fargo here?
Well, certainly this is an expanding problem for Wells Fargo because they're subject to not only the investigation that just concluded with a $185 million fine, but now there are indications that the Justice Department is looking into them, as well as this recommendation from the Democratic senators that the Department of Labor look into them. And certainly if Wells Fargo has committed the acts that the Democratic senators have indicated that they may have done over some period of time, then they will have trouble because they will have violated the Fair Labor Standards Act, as well as various state laws that are applicable in the same situations with regard to retaliation and with regard to overtime in particular.
And obviously it's a national bank. So do you anticipate that other states' attorneys general might join in some sort of action?
I think there's a high likelihood of that, except if the federal government asks them to refrain from doing it while they're conducting an investigation. But certainly with Wells Fargo footprint around the entire country as well as the world, I think there's a high probability that attorney generals are going to be looking into this in the near future.
How do they manage this, or can they manage this?
Well, I'm not on the business end of things, but certainly they're going to have to create a very large litigation reserve for this particular issue, as well as other issues that are going to crop up based on these activities. And I think that you'll see that reserve set aside in the near future. But it's going to be a long slog for them because this activity was taking place over a long period of time, certainly with the understanding by senior people at the company that it was happening, and they did nothing to fix the problem over that period of time.
Now, we've been talking about investigations and things like that, but there could also be individual lawsuits, could there not?
Certainly there will be individual lawsuits, and my understanding is that there are individual lawsuits that have already been filed in California. But I think we're only seeing the beginning of that, and based on the number of employees that Wells Fargo has, the number of people who are working in their branches, the number of people who are subject to these sales guidance from Wells Fargo, we're going to see an awful lot of lawsuits, particularly if there was retaliation against people who were in a position to know that something wrong was going on and complained about it, and then were either discriminated against or were discharged, which is a violation of the Fair Labor Standards Act.
You know, a lot of businesses try and get out in front of controversy and put it behind them as soon as possible. But with this many pending or possibly pending actions, it does not sound as though this is going to have a quick resolution.
I wouldn't expect the resolution to be too quick, particularly with the number of regulators and entities that are investigating them or about to begin investigations, including the Senate Banking Committee and the House Finance Committee, which, of course, is a very public stage and is going to lead to a lot of chest beating by politicians related to this, and then get administrators involved on a much expedited basis than they would have otherwise.
Does it, speaking as a lawyer who litigates cases like this and advises companies on cases like this, does it help if the company puts in a dramatic change of management? Does it lessen the penalties that they might get hit with, or does it not matter at all?
It could have an effect on settlements that they're making with regulators, certainly, but it will have no effect on the damages that individuals are entitled to under these various federal and state laws. If there are violations have occurred, there are statutory penalties and statutory rights that people can avail themselves of, including back pay and including liquidated damages.
On that note, Michael, thank you very much for your insights. We appreciate it.
My pleasure.
Michael Deutsch with Singer Deutsch. Microsoft and Target both announced big buybacks this week, as we've reported. And that's one of the ways that companies return money to shareholders. But it's also a way for companies to improve their earnings per share. Dominic Chu explains.
Whenever anyone says they're going to spend $40 billion on anything, they'll grab headlines. And that's exactly what happened earlier this week when Microsoft said they're going to start a new program to buy back up to $40 billion of their own stock. in addition to boosting their dividend payment.
Buybacks are important because it's one of the ways that companies can return money to their shareholders. One way, obviously, would be dividends, by which they send a check to the shareholders, but they can also buy back in shares, which lowers the number of shares outstanding and lifts earnings per share.
According to S&P Dow Jones Indices analyst Howard Silverblatt, the three biggest corporate purchasers of their own stock in the entire S&P 500 are Apple, General Electric, and Microsoft. In the 12 months ended in June, both Microsoft and GE had spent around $16 billion each on buying back shares. Apple was by far the biggest purchaser, buying back around $37 billion during that time span. But when it comes to which companies saw the biggest reduction in their share counts through stock buybacks, it's American Airlines, H&R Block, and Qantas Services. Each bought back enough stock to lower share count by at least 20%, thus helping companies improve earnings per share. The concept of stock buybacks has been somewhat controversial. Should companies be buying back their own stock or taking that cash and reinvesting it in the business to grow and hire more people? A big reason why companies can do these larger scale buybacks is because of how low interest rates are.
Companies can issue debt at extraordinarily low rates and then buy back shares, and that increases earnings per share. It increases the return shareholders get, and there's very little cost, again, with rates this low for companies to do that.
Now that the Fed has signaled that interest rates could stay lower for even longer, stock buybacks could continue to be a big part of the corporate profit story and help keep stocks higher. But the big question is how long that run can last. For Nightly Business Report, I'm Dominic Chu.
Still ahead, massive breach. Yahoo confirms a breach that affects 500 million accounts and dates back to 2014. And now to Charlotte, where a state of emergency has been declared after 2 nights of violence and continued protests over the police killing of a black man. And even as some officials urge city firms to return to business as usual, a number of them told their employees to work from home today. Those businesses include Bank of America, Wells Fargo, Fifth Third Bank, Duke Energy, and United Way. And a statement late today from the NFL said the league is planning to play Sunday's game between the Carolina Panthers and the Minnesota Vikings in Charlotte. To the campaign trail, Democratic presidential candidate Hillary Clinton has proposed a 65% top rate for the estate tax. This is according to an updated version of her tax plan that was released today. The 65% estate tax rate would be the highest since 1981. According to the Nonpartisan Committee for a Responsible Federal Budget, which advocates fiscal restraint, Clinton's updated estate tax and other new proposals would generate $260 billion over the next decade. And that same think tank analyzed both Clinton's and Donald Trump's tax and spending proposals and found that Trump's would increase the debt 26 times more than Clinton's. John Harwood joins us from Washington. John, those are some big numbers. Exactly what did the Committee for a Responsible Federal Budget find when it comes to the impact of Clinton's and Trump's policies on debt and deficits?
Well, remember, Sue, that the committee is only evaluating the bottom line, not whether it's good to have bigger government or smaller government that's paid for. So, for example, for Hillary Clinton, they estimate that she would add a lot of spending, but pay for it by raising revenue. And so on net, she would only average, according to the center, $20 billion added to the deficit every year. Donald Trump, on the other hand, has proposed a massive tax cut, and because of that tax cut, they estimate that Trump would add $530 billion a year to the federal deficit.
You know, I assume also that there are some other surprises or details in there that the public's going to have to sift through.
Well, exactly, Sue. And it was the surprise was the estate tax proposal you talked about. It was not announced by the Clinton campaign. They had previously proposed some small business incentives, and what they've now said is they're going to pay for those with this estate tax proposal. It would raise the top rate from the estate tax from 45%, which is what she'd previously proposed, to 50% for estates at $10 million or more, 55% for estates at $50 million or more, and 65% for estates at $500 million or more, $1 billion for a couple. Obviously, that would affect only a tiny number of taxpayers.
Is it risky for her to do that so close to the election?
I think it is, and I think that's why she didn't announce it with a lot of fanfare. On the other hand, she can come back and say, Donald Trump, this is the kind of proposal that would only affect people like you, and that's a fairly simple argument to make on a debate stage.
And how does her tax proposal compare to the estate tax specifically to the Trump proposal?
Well, couldn't have a sharper contrast. Highest rate since 1981, as you mentioned earlier, on those very largest estates. Donald Trump would eliminate the estate tax entirely.
And John, finally, before we let you go, another hack, this one of a White House staffer. What do you know?
Well, that hack of a White House staffer resulted in Michelle Obama's passport information being displayed on a website, DC Leaks, which has been linked to Russian intelligence services. And you had two members of Congress today come out, Democrats, call for the Russian government to stop interfering in U.S. elections. This is something that President Obama has also discussed and cast a wary eye on, and we'll see whether or not that has any effect. No signs of having any effect, those warnings so far.
To be continued. John, thank you very much. John Harwood in Washington for us tonight. Yahoo confirms possibly the largest data breach ever, affecting 500 million users. That's where we begin tonight's Market Focus. The tech company confirmed a hack in late 2014 compromised the private information of at least 500 million users. Yahoo thinks it was a state-sponsored act. The data includes names, email addresses, telephone numbers, and dates of birth. Shares of Yahoo rose a penny to $44.15. AutoZone topped its earnings forecast thanks to a new store openings, but revenue missed. With a 12% rise in earnings, the auto parts retailer has now posted double-digit growth for 40 straight quarters. Still, AutoZone shares were off a fraction to $748.23. Rite Aid also posted better than expected earnings, with sales falling a little short. The drugstore chain said pharmacy sales were hurt by less expensive generic drugs. Shares of Rite Aid rose 2 cents to $8.12. Scholastic's revenue jumped 48%, while its loss narrowed from a year ago. The publisher said it was helped by the sales of the latest book in the Harry Potter franchise. Scholastic shares rose 2.5% to $39.32. And e.l.f. Beauty had a strong debut on Wall Street. The discount-priced cosmetics company opened at $17, which was above the range for the initial public offering. Shares of e.l.f. finished up 56% at $26.50. And Airbnb is being valued now at $30 billion. According to Dow Jones, the valuation follows an $850 million fundraising round for the home rental company. The deal is reportedly designed to relieve some of the pressure to go public, giving it more funds to spend on overseas expansion. After weeks of controversy and questions about the safety of its AutoPilot driver assistance technology, Tesla is rolling out a new version it says will make driving hands-free even safer. But will it end the question of how much control drivers should really hand over to the computers in their car? Phil LeBeau has more from the Tesla headquarters in Palo Alto, California.
Krishna Kaladindi from San Jose, California, loves driving his Tesla Model S in autopilot mode, where he takes his hands off the wheel.
The driver has to understand the limitations of it, and it's like learning to drive. You kind of have to know what the limits of this autopilot are, right? Because it's still not 100% autopilot. You still need some kind of steering.
That doesn't change in the new version of Tesla's autopilot system. In fact, it's increased driver warnings, with the instrument cluster lighting up and the vehicle sounding a warning when the driver needs to take control of the car. In addition, the system uses the car's radar to provide a better view of the road so it can brake quicker and avoid collisions. The system also can steer the car on highway interchanges. Tesla CEO Elon Musk says the changes will make Tesla's Model S and Model X the safest vehicles on the road. But not everyone is buying that claim. AutoPilot is still requiring drivers to be ready to take control if they're heading towards a collision. And that worries analysts who track auto safety.
It's almost as if they're allowing the car to drive, but the human is there to back up the car. And that's really kind of a dangerous situation because, well, quite honestly, humans aren't designed that way.
Still, the federal government is pushing the development of self-driving cars. Earlier this week, it set new rules for what's expected of automakers building autonomous drive vehicles. And Tesla's AutoPilot system remains the focus of a federal investigation following the death of a man driving his Tesla in AutoPilot mode when it crashed in Florida earlier this year. Krishna Kaladindi knows the system is not perfect, but he has no plans to stop using it. In fact, he believes the new AutoPilot will make his daily commute in the Bay Area even more enjoyable. Phil LeBeau, Nightly Business Report, Palo Alto, California.
They are a growing wave of bounty hunters. Instead of chasing down the bad guys, though, they're chasing high-tech bugs that could put your personal information at risk. Andrea Day has that report.
We're starting to approach a place where this is actually a sustainable way to make a living.
Bounty Hunters 2016, not on the streets looking for criminals, but hacking into systems searching for bugs before the bad guys can find them.
They think like bad guys, but they're good guys.
And they're in hot demand by companies like Apple, AT&T, and Twitter, who are willing to pay people to expose their flaws.
If they're not doing this, then you should be questioning whether or not they should be selling software.
At his software company, Okta, David Baker has a security team in place, but still hires out hackers on the side.
I use it very tactically to test my team.
The hackers he relies on are from BugCrowd. Started by Casey Ellis, the company uses researchers from around the world to expose flaws.
When one of them sees benefit from working with us, they talk about it and then the others join in.
Clients can decide to use a select few or the entire crowd made up of thousands of hackers.
They literally never fail to get in. There's always something that people have missed, and that's because vulnerabilities are hard to avoid.
The flaws, he says, range from trivial to major that could expose secret data or remotely take over a self-driving car.
The more impactful or severe it is, the more they get paid.
BugCrowd isn't the only bounty startup, and dozens of firms have launched their own programs. Facebook tells us, quote, in the past 5 years, we've paid more than $5 million to more than 900 researchers. Its largest payout to date, just over $33,000 to a Brazilian engineer who was later hired by the company. Yahoo says it's paid out more than $1.7 million in bounties and has a relationship with thousands of hackers. Google has a bug hunter university. MIT pays student hackers in special campus currency. Some firms offer their staff incentives to track down bugs. But according to Ellis, those same workers could also be a threat.
So I think the risk of insider hacking is real for anyone. They really need to be thinking about, what is an insider capable of, and then what kind of controls do we need to put in place to, reduce the risk of what they're likely to do.
By now, he says, he's not shocked by what hackers uncover, but he warns his new clients.
You're about to go down the rabbit hole. There is almost a terrifying element to learning how vulnerable everything is.
And one of the reasons why he believes it's better to look outside the business for hackers is that the people who are building the software don't always think like someone who's trying to break it, like the bad guy trying to get in. I'm Andrea Day for Nightly Business Report.
Coming up, the mobile gaming market may be booming, but having a few top-selling games does not guarantee long-term success. The mobile gaming market is growing fast. Take Pokemon Go. It's the latest game to take over mobile phones around the world. But just having a hit game isn't enough. You have to keep them coming. Julia Borston shows us how one company is trying to carefully navigate its way to success.
The mobile gaming market is booming, projected to generate nearly $40 billion in revenue and overtake console and PC games for the first time this year. Los Angeles-based Jam City, the maker of games like Cookie Jam and Panda Pop, is part of that boom. The company, formerly called SGN Games, announcing a name change today and saying it's on track to surpass $400 million in annual revenue this year. Signs the company could be preparing to go public.
I think we're always setting ourselves up for an IPO, but as we know, the markets are very volatile out there. So setting ourselves up means having lots of games in the top grossing charts.
Having a few games atop the charts isn't enough to guarantee long-term success, which is why Jam City is licensing a range of properties, including most recently the cartoon franchise Peanuts, to help diversify its portfolio. CEO Chris DeWolf, who also co-founded MySpace, wants to make sure that Jam City doesn't become like Zynga, which soared with the success of its Farmville games, but couldn't consistently replicate that success. Zynga shares have dropped 80% from their peak in 2012.
You have to make sure that your franchises last for not 1 year or 2 years, but 10, 20, 30 years. So our top games have been in the top grossing charts and making a lot of money and continuing to grow for 3+ years.
Rival King Digital with Candy Crush and other games continues to grow since it's been acquired by video game giant Activision. Now we'll see if Jam City draws acquisition interest or if it continues to go it alone as it works to grow its 50 million monthly active gamers. For Nightly Business Report, I'm Julia Borston in Los Angeles.
The Department of Education is no longer recognizing the nation's largest accreditor of for-profit colleges, and that could force some schools to close and jeopardize financial aid for hundreds of thousands of students. The Accrediting Council for Independent Colleges and Schools has come under fire for its oversight of the now defunct Corinthian Colleges and ITT Tech. The agency has 10 days to appeal. And finally, tonight, Americans will spend a record amount on Halloween this year. According to the National Retail Federation, nearly $8.5 billion will be spent on candy, costumes, decorations, even greeting cards. That's up nearly 22% from last year. Before we go, here's another look at the day on Wall Street. The Dow gained 98 points, the Nasdaq added 44 to an all-time high, and the S&P 500 was up 14. And that will do it for Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us. Have a great evening, and we'll see you tomorrow.